Welcome to the Dream for All Shared Appreciation Loan Guidelines. I know some of you have been waiting for this. You've probably watched my previous video on when it was released, but today, March 27, 2023, the program was officially released and the guidelines as well. So guidelines are used by lenders like ourselves, and we work with multiple lenders who offer the Dream for All program. So there are a lot of lenders out there that do participate but work directly with them. So I'll show you a little bit of how this program works. So when you are out shopping, you know what to prepare for and how it works, because they don't just give you the 20% for this loan up front. There is going to be a little bit of legwork, and I want to share that with you so you have the best experience. So who am I? My name is Raphael, and I've been in the credit and mortgage industry since the first recession. Now, it may feel like you're in one right now. It'll pass. They always do. I specialize in leveraging your home and your credit to build your worth. So what I do is I take a step back and analyze what your strategy is for the next 5 or 10 years, and then I give you advice based on what you're trying to achieve. So let's take a look at eligibility. So each borrower needs to be a first-time home borrower, so that means you can't have lived in a previous home for the past 3 years for you to be considered one. You can either be a citizen or a national of the United States or a qualified alien as defined by Section 8 USC 1641. So if you don't know what that is, we can have another video or look that up. You have to meet the credit requirements. So you are going to have to look at your credit. And if you haven't looked at your credit report, it is probably a good time to speak with someone like myself to be able to look at your credit report and see if you have the income and the credit requirements as well to take advantage of this program, because there are limited funds, and right now, depending on when you're watching this, it's a good time to at least get informed and see if it's going to be a right fit for you. So CalHFA, they have approved lenders, like I said, like myself, and then they have a Lakeview, which is a loan servicing. So that's eventually who is going to be sending you your statement is Lakeview, not the company that originally does the loan for you, that they're going to transfer the servicing, so who you get your statement. So it's a little bit it's not really that important, but it is, because they also have to meet that criteria. So you kind of have to go through like 3 levels. You have to go through the lender, and then you have to go through CalHFA, and then Lakeview servicing as well. So homebuyer education, you will have to take a training for homebuyer education. It is required by CalHFA conventional loans, and we can go over in detail what that is, but it's going to be a training that you're going to take and be able to at least take that training to be able to get this loan. It doesn't take that long, but you do have to complete it, and that's part of the guidelines. Under occupancy, so you have to occupy the property within the first 60 days of closing. So whether you are in a lease right now and you need to move in or move out, you'll have to move into your house within 60 days of closing. And non-occupant co-borrowers are not allowed, and non-occupant co-signers are not allowed as well. So whoever, maybe it's husband and wife or siblings, but whoever is on the loan also can be there, but they're non-occupant co-signers. So if they're not if someone's helping you buy and they're not going to live there, they won't allow that. So the loan to value is really important, because this comes into the guidelines of what is going to be the loan to value, and combined, it needs to be anywhere from 70 to 105. So it all needs to be within the down payment that they give you. So it'll be pretty easy for you to meet the loan level of loan to value, because they take a look at how much down payment there will be and versus how much the property is really worth. But because you're getting up to 20%, then this really helps you out. Now, CalHFA has its income limits, and I will post the link down below. But if you want, you can pause this video and just copy this URL, but take a look at where you live, what county, and what is the limit, because they do have limits into how much do you make, right? There has to be a cap, and there's something as well for those that make 80% of the income limit. So you'll take your income limit from whatever county, like Sacramento, and then you'll just times it 80%. And if you meet with those lower income limits, then you have a different version of this program as well. So it'll help you out. And if you need to refinance, there is a slight variation in the program. So during the life of the shared appreciation loan, CalHFA will allow borrowers to refinance on their first mortgage into a single limited cash out refinance as defined by Fannie Mae. Fannie Mae's some guidelines as well that we on the back end have, without requiring immediate repayment of the shared appreciation loan. So there may be an opportunity that presents itself that you could refinance to a lower rate to save you money without having to pay off the loan right away. Because remember, despite of what you've seen on videos on social media or clickbait, this is not free. This is a loan from the state, and it's a silent loan, so it'll be recorded in title, but you don't have to make a monthly payment. There's nothing for you to do. It just sits there, and in the event that you trigger like a refinance or a sale, things like that, then you'll have to pay that back and part of the equity as well that they have. So it's a win-win for both the state. And a lot of times you may ask, like, what do they do with that money? They're not out to just make more money. They're going to put it back into the pot so they can re-lend it out to more families. So it's a great way for future generations that don't contribute too much into the program, that this program kind of grows on its own because it's that shared appreciation. So if you will, you're kind of helping the future generation because the pot is only getting bigger for them as well. And the program, there is a one-time exception for the refinance, which we've already talked about. And there's the terms is that depending on how much you take is how much you'll need to pay back. So if it's 10%, then you'll need to give back that 10% plus 10% of whatever that appreciated. So it's a great way for you to get your foot in the door. So some of these are some of the guidelines, but a lot of the times there's a lot of variables. Like if you don't know what your credit is or your income, it's a good time to sit down with someone like myself to go over those questions, because everybody has a different scenario, and that's okay. Whether you've had like a gap in employment, or you have a question regarding your credit score, you have a collection on there, and a lot of times don't think that you may not qualify, because like I said, there is a lot of lenders that will work with you, and I work with all of them. It's just that you need to first take that first step, right? And if you're still a little confused and you haven't watched that first video, it's up to 20% down payment, and that what that allows you to do is that your buying power goes up a little bit more. Why? Because your payment goes down. So here's an example of a $500,000 home, or the value of it, and the down payment assistance loan is $100,000. So your first mortgage would only be based on a $400,000 loan. So to defer or to put away that $100,000, where you don't have to make a monthly payment towards it, it really helps, because a lot of times where you feel like you're getting priced out, right now you have a small window of opportunity while they still have funds for you to get into a home. And a lot of times, a lot of people will try to time the market despite of what you hear in the news, but the only reality is that the rent is going to continue to go up. So if you're on the fence, don't worry, next year your rent's going to go up. It just happens. I get calls all the time. People's rents have been going up by $500. So a lot of times it's not if it's going to go up, it's when it's going to go up. So a lot of times if you fix yourself into a home, if you get yourself in here, it's a 30-year fixed loan. So that means that next year your payment's not going to go up. But you know what's going to go up? Rent. So a lot of times, I go back and forth, but at the end of the day, rent is going to continue to go up. So put yourself into a position where you take advantage of this. So maybe you're not going to make all the equity, one, because you didn't put in the 20%, and also they're going to take 20% of that equity, but you're still, like I said, locked in to a payment that you can't afford, and it's not going to go up year after year. So the eligibility requirements is that the minimum credit score is between 660 and 680, and a lot of times, depending on what you're doing right now, maybe good to bring down the balances on your credit card, or figure out how to get that credit score to go up a little bit more, especially as we're going month to month. The max debt to income will not exceed 45%. So we really need to crunch numbers and take a look at how much do you make, and how much is reported on your credit report with monthly expenses like a car payment, a credit card, and then making sure we can get that payment with everything included, which is your payment, your interest, your taxes, and your homeowner's insurance. Those 4 things that we want to make sure that we include into your payment needs to equal no more than 45% of your income. And we've already talked about the income limits, so that link will be posted below. And you must not live in a property owner of a property over the last 3 years to qualify as a first-time home buyer. So I know I've gone through a lot just now, and I know you have some questions. So I wanted to share with you some of the guidelines and what will happen. So the first thing for you before you apply is to get pre-qualified, because before you go out there, we need to get those documents in. We'll pull the credit report, take a look at it together, and collect the documents that need to go in to the lender before you get your pre-qualification. Your pre-qualification is a blessing it's a letter that goes out to you that your realtor uses to be able to make an offer, because on the other end, whoever is selling you the house, they want to make sure that you qualify. So once that happens and the offer gets accepted into escrow, we'll submit it into underwriting. But once underwriting comes back and approves it with conditions are normal, right? That's step 6. Once we fulfill these conditions, the next thing is that it's going to go out to CalHFA. So there is a little bit of a process here, and you want to make sure that you give yourself enough time in escrow, meaning how long this transaction will take, because it'll go out to CalHFA. They have to go through their process to be able to send the money to the lender, that 20%, and then you'll get your final clear to close. Clear to close is just that final blessing that not only CalHFA reviewed it, sent the funds, and then you also have the underwriting team taking a look at it before you get to closing, which everything gets funded at that point, and then the house title records at the county level, and eventually after it gets recorded, you will have your keys. So there is a lot of questions that I get about this program, and guidelines just came out. So I know that a lot of people ask a lot of questions and think maybe it's free. It's not free. It's not a grant. It's a loan. CalHFA has different ones, but you may fit the box as well. One of the other questions that I get is like, what about closing costs? Well, this will cover some of the closing costs. However, right now you're probably in a market where you have sellers who will give you money for closing costs. It's not guaranteed, but it's on a case-by-case basis with the loan. So the best thing you can do is just see if you could get that done as well. Now, if you still have questions, you want to talk about your scenario and how this process works, the best thing I can do is set some time so you and I can talk. And if you found this video to be helpful, I just want to ask you for a quick favor. If I can count on you to send this to a friend, family member, or coworker that can benefit from this program, because a lot of people don't know it exists until it's already gone or the funds are already gone. So feel free to share this video. Hit the like button. It'll get out to more people if you just share it. My contact information there. If you send me an email, we'll schedule some time and talk about your specific scenario. I hope this helped you out, and we'll see you on the next video.